Hey gang, Dennis Tubbergen here with another market update. Today is April 16, 2018, and I want to give you just a little bit of analysis that I did when I wrote this week's Portfolio Watch. If you're not yet a subscriber to Portfolio Watch, you can go to yourretirementoutlook.com and subscribe. But here you can see that in the data box here in this week's Portfolio Watch, stocks, gold, silver, all were up. U.S. Treasuries and the U.S. dollar were basically unchanged. Now, in the report, I did some analysis of a couple of different markets. This one is an analysis of the S&P 500. As you can see here on the screen, this is a daily price chart. As I usually do, I'm using, again, a Japanese candlestick chart. And every one of those green bars on the chart represent days that the market went up. The red bars on the chart represent days that the market went down. Now, if you take a look at this point here, where the downtrend line actually has been drawn, that's January 26. I remain convinced that the highest probability for this market continues to be downside. And there's several fundamental reasons for that. But also when you look at this chart, we have a series of lower highs. However, if you take a look at this line that I've drawn here across the bottom of the recent price action, going back to about the 1st of February, you see that stocks there have developed, at least on a closing basis, a pretty strong period of support. So in order for this forecast to actually be confirmed, we're going to need to see prices break through that support line. I expect again that that will happen. However, until that does happen, we can't be convinced that this market's primary direction will be downside. Now this chart, which is not quite as easy to see, is a daily chart of an ETF, or an exchange traded fund, that tracks the price of gold. If you take a look here, beginning in 2016, gold has been in an uptrend. However, we have almost an opposite situation in the gold market, which incidentally is not surprising. Stocks and gold are typically inversely correlated, which means when stocks go up, gold goes down, and vice versa. When gold goes up, stocks go down. So now we have a period of a point here of resistance as far as the gold market is concerned. So while gold has been uptrending here for the past really almost 2.5 years, we've got a pretty significant line of resistance that we need to break through to see stocks, or to see gold really rally. Now I expect that we'll see both of those things happen, and I think that you could see them happen at about the same time. This points out a couple things. One, it shows you technically where stocks and gold are, but it also makes a point that I don't think you can make too often, especially in this market environment. Gold is a really good hedge if you're worried about stocks declining, and gold mining shares, mining companies, can be even a better hedge. One needs only go back and look at what happened during the Great Depression, as the Dow Jones Industrial Average dropped 90% at the beginning of the stock market decline. Homestake Mining, which was a mining company, the biggest mining company, Homestake Mining shares went up. In fact, if you had 90% of your portfolio in the Dow in 1929 and 10% in Homestake Mining, by 1935, you were whole. So gold is a really good stock hedge, and one of the things that we're looking at is where will this gold Dow ratio go? Right now, if you take the value of the Dow, 24,360 as of close Friday, and divide by the price of gold per ounce, you get a Dow gold ratio of 18.09. Our forecast is crazy as that might seem right now, is that will go back to parity. We'll see that ratio go to 1 in our view, and that means the Dow and gold will be on par. So certainly you want to be prepared, assuming the forecast is right. If you're prepared and the forecast is not right, you've simply probably missed some upside and protected yourself from some significant downside. So today again is Monday, April 16. That's your market analysis update, and I'm Dennis Tubbergen.